Good morning. It's Monday, July 28th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So the Cubs, they took 2 out of 3 against the White Sox over the weekend, but the White Sox were able to pull off that victory in the first game here, and it put together some momentum, and the bats were really hot. So it was a quite entertaining here series back and forth. And forget Sunday Night Baseball, because we had that deal here with the European Union on Sunday, and what did that do? That made a lot of these markets gap higher, and they're starting to fill that gap, specifically on the S&P 500, the NASDAQ. You also had gold futures. They gapped lower here, bouncing off tactical support one here, 33.05. And I'll start to put these tactical ranges, kind of building them out more, and I'll give you guys more of a process on how to handle these. And I'm starting to color coordinate some of the things here. So if you look at tactical resistance 3 and support 3 from the previous session, that really gives you your widest volatility band. And what you want to do is you want to look and see, are we making higher highs and higher lows in volatility? Are we making lower highs and lower lows in volatility? And that's what we're seeing here really in the gold and the silver market. And that comes oftentimes as a precursor to big sell-offs in these markets like what we saw on Friday. So when you start to look at some of the color coordination here as far as where these tactical ranges are flowing, you could see where there's surges of volatility come into place. And we saw gold futures down massively on Friday, and also silver down about $1 here, and what seemed like low volatility. But you look at the gold and silver market. So silver down 11 cents. Gold futures positive here on the session. Copper just slightly lower. You look at how things are playing out behind the scenes, and you want to go under the hood when you're buying any kind of car, and you look at the silver market. Well, the exchange traded funds, that backed the precious metal here and swelled by about 2.7% last week, the biggest increase in a year. Worldwide holdings have expanded 10 out of the last 11 weeks, pointing to largely consistent inflows into the silver market. And you go to UBS, they put out a report here called Room to Run. I was reading this over the weekend. If you know me, I print off a ton of research, and then I'll go sit by some hotel pool somewhere or chill out by the beach and kind of digest a lot of these things here, because the fishing has been subpar, especially on the Gulf of Mexico. A lot of different things out there as far as sorghum and seaweed and stuff, just jamming up your lines. But that's off topic here. Getting back to UBS here, they raised their forecast from $38, which we've achieved that, on up to $42 an ounce. That was their September 2025 price target, 38. It hit. June 2026 is kind of where they're seeing this price momentum continue to travel upwards into the $40. And basically what they're saying is it's stronger investment demand, which that's what we're seeing from the ETF side. The Fed cuts rates, which we haven't seen that yet. We do have a Fed meeting this week. I was checking in on the CME's Fed Watch tool just to see if there was even a chance that they cut rates. 2.6%. That's all they've got for this July meeting. Now, Fed Governor Waller came out and said, why wouldn't they just cut rates? I mean, what difference is it going to make if you wait till September or do it now? You might as well appease Donald Trump and just get it over with and cut the rates. We are seeing some of the economic data start to deteriorate, but it's kind of leveling off in all reality. So it's not really justifying. It's more not too hot, not too cold, so they're leaving rates unchanged here. But they're also saying that the recovery in the industrial activity is beginning, and we start to see that when we come out of any kind of these crises that we've seen around COVID, around the financial crisis, the dot-com bubble, this tariff nonsense that occurred in April. You start to come out of that, and what happens is that's when the industrial metals really take off. So I'm a big believer once we can get over 39.91, that was that recent high that we saw last Wednesday. And if you read my Kitco article, I wrote a hit piece here on the manipulator of the silver market. And that manipulator, the biggest one in the commodities markets right now, is Donald Trump. Because if he would have just waited 10 minutes, we could have got through that $40 mark. But again, off topic. Guy comes out and says raising tariffs, he doesn't like this, he's fighting with that. These commodity markets are all over the place like a yo-yo here. So they've got these new price forecasts. They're reiterating their preference. This is UBS to stay long silver, and they view price pullbacks as opportunities to buy. So they continue to favor, this is UBS, selling downside risk in silver for yield enhancement. What does that mean? Basically what they're looking at doing is you get a big price break, and what they'll do is they'll sell puts or they'll sell put spreads to bring in some kind of credit here. So yes, they are increasing their exposure at these lower amounts. Now, the the old adage is that 80% of the options that are bought and held to expiration expire worthless. So they're trying to put those particular odds in their favor by selling puts. Not a recommendation to the public because it's a highly aggressive strategy. This is what UBS is saying here. So selling downside risk in silver for yield enhancement. Now, checking in at these markets at a glance here, you do have the S&P 500 did gap higher here, up about 0.2%. You got the NASDAQ pushing up just under about 0.5%. You also have the Russell pushing up, and that's one of the stronger of the indexes here right now. You look at the Dow Jones, they were talking about that just slightly below its all-time highs, but we are filling that gap out here. Going on to Bitcoin. Bitcoin did gap higher, and I was watching the cryptos over the weekend, watched a lot of great videos too off of YouTube on some of the different adjustments where Ethereum is really taken over, and you're seeing a lot of these different companies out here are trying to build Ethereum treasuries because they look at it as a lower bar for entry rather than Bitcoin, and there's just too much competition. You're dealing with things like MSTR and other countries out there trying to build their Bitcoin reserves. So they're looking at Ethereum as an opportunity. Ethereum futures just below that 4,000 mark, so up about $243. You have Bitcoin up about 2,000. You also have Ripple jumping up about 15 cents here, pushing up to about 340. We're starting to trade that futures as well. Platinum up $31 at 14.55. You got the dollar index up 60 points here, and you have all the foreign currencies pushing lower with a big sell-off in the euro currency. The euro currency is the one that I'm looking at this price band between like 116 and 121 and looking at opportunities to position to the upside on there. If you'd like to open up a futures trading account, get involved with some of these things, let me know, specifically on Ripple, some of these currency plays that we're doing, and some of the precious metals that we're here looking at. Now you look at stocks, they are set to extend Friday's record high after that weekend trade deal here with the US and the European Union. Positive commentary from strategists are adding to these good vibes here as traders await the data and the earnings that are really going to define this market over the next quarter and into the second half of the year. So the EU, they're going to face 15% tariffs on most of its exports, including automobiles. Now that progress here on the trade deal here really prompted other strategists like Oppenheimer to raise their S&P 500 year-end target to 7,100. That's a new high on the street. While Morgan Stanley's Michael Wilson, he says he's leaning more towards the bull case on U.S. stocks. So you get to Morgan Stanley, that's their report that I read, and they're basically saying that they look at a bull case here on up to about 7,200, and that's their 12-month price target going into next year. Now you look at the way option traders are playing in this market here. Well, the option dealers, they're broadly long gamma, and what that does is that creates conditions for lower volatility. And you look at the volatility index continuing to sell off here, down about 45 points here, sitting at 1742. That's for the August, and then you have September up at 1935, starting to come down here just a bit as well. You got 10-year Treasury notes pushing on up just a little bit. And it's really what's putting the brakes here on this gold market at the moment, and the silver rally as well is the dollar, 10-year Treasury yields, the good vibes in the S&P, the outside crypto markets making moves here, and that's what really distracts from these metals and things like that. So you got the dollar higher, possibly because of that monetary policy and the economic data. It's really going to grab the spotlight here. People are going to really be looking at that. The Fed decision, the commentary on the path ahead, those are all kind of the key events that are going on this week, and that's kind of the middle of the week here. We're also going to have action-packed data here. Nothing today, but GDP, payrolls, consumer spending, PMI, ISM manufacturing. You get earnings from Amazon, Apple, Meta, Microsoft, all reporting. You go across the pond here on both sides. You go to Europe. European stocks, they did gain as the US and European Union. They agreed on that tariff deal that eased some of the fears of the trade war. And then you go to Asian trading. Well, Asian trading slipped here, and it's because of the fact that they are meeting with U.S. and Chinese officials. That meeting is taking place in Stockholm, and they're wanting to extend their tariff deadline beyond mid-August here and discuss other ways to diffuse some of the trade tensions. So you go to energy, a lot of discussion about energy within that. Basically, the U.S. wants China to stop buying Iranian and also Russian oil, but they know if they do that, they're going to really upset Russia and Iran here. So it's going to be challenging for Asia and specifically China to buy more U.S. energy, but U.S. energy stocks, they are moving higher because the European Union also agreed to buy a $750 billion worth of American energy products and invest $600 billion in the U.S. on top of those existing expenditures. So again, economic data here, just a little bit. Dallas manufacturing activity, not a real big mover and shaker. You got the Fed's communication is in a blackout through the end of the month here. And then you go to the ETF flows, and this is where I kind of started this video, was the exchange traded funds. They only added about 42,000 ounces of gold holdings previous trading session here. But you look at the ETF flows here on Friday, they added 735,000 more ounces of silver holdings in the previous trading session, taking this year's net purchases up to 73.4 million ounces, fifth straight day of growth, longest winning streak since June 13th. Someone's really out there accumulating a lot of this. And ETFs, they increased their silver holdings by about 20.4 million troy ounces last week here. And that's the big mover and shaker. So both of them up about 10% year to date. And the gold silver ratio, shockingly at 87-1. So no real big movement here, bouncing off of about that 85-1 level. You guys got any questions? I'll be shooting out the chart pack. A lot of good details here in the metals edge here. Also going to write up kind of a process on how to utilize those tactical ranges a little bit better within your trading and overlay that as far as on top of the chart pack. And remember, it's never just one thing. It's a lot of things in commodities here, and there's more than one commodity here that's in a bull market at pretty much at all times. So if you're frustrated with some of these other markets that you're involved with, maybe it's the grains, maybe it's something else, you might want to start to look at other commodities, because you might not be the greatest silver trader in the world, but you could be the greatest pork belly or lean hog trader. You never know. You never know what your personality identifies with. So remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.